For those of you who are not keen followers of the stock market, Samir Arora has a more than 3-decade excellent track record in the Indian stock market and actually in the global stock market as well. He has performed better than average through many market cycles and ran the highly successful Alliance mutual fund for many years in India before starting his own company, which is Helios Capital, which runs hedge funds based in Singapore, and now also a PMS for Indian investors who would want to benefit from Samir's experience. Samir, it's great to have you on the show and good to see you after a long time. The first question that I'm itching to ask you is, did you buy Zomato?
Before that, let me say thank you very much for your kind introduction and welcome back to India or to Indian business channels. Zomato, we only invested in the IPO, which anyway got oversubscribed some, I think 100 times or something, and we invested some $50 million, and we didn't get anything useful because it was heavily subscribed. I think it was oversubscribed 55 times, if I remember. So we sold it on day one, and that is where our current interest is over by now.
So you're not a believer in the valuations of that one. My broader question, of course, is to do with what is going on with valuations out here, particularly with some of these IPOs. Does it make you cautious about where the markets have reached?
So first, let's talk about the markets. I don't think the markets have gone up a lot if you look at it over a slightly longer period. So if you say that what should be the reasonable return expectations from the Indian market, well, the last some 20-odd year returns are 15-16% per annum, which would tie in with GDP growth in nominal terms and a slightly higher corporate profit share, because the corporate GDP part might be a little better than, say, the agri part and all that. So I just put up found these numbers for you today. So if you look at past 3 years Nifty index, starting from today going back 3 years, it is 15.5% per annum. If you look at 5 years, it is 16% per annum. If you look at 10 years, it is 14.8% per annum. That is from 2011 to 21, or 16 to 21, or 18 to 21. So all of them broadly, nearly exactly in line with what you would normally expect. Now, if you were to do this in 2007, although of course we are not saying it's like end of 2007, but if you looked at it from December 31st, 2007, the previous 3 years, that means 5, 6, 7, would have were 45.7% per annum, and 5 years was 44% per annum. So big picture, we don't think valuations, valuations a little bit might be high for some things, but the market is sort of magnifying the performance because of its last 1 year performance. Now coming to the IPOs, that is actually one area where you may theoretically say there is a risk, because this IPO market looks like the peak of 2007, maybe even the 99, 2000 peak, in terms of number of times of oversubscription and the number of IPOs and the size of those IPOs. But I would think that is one of the few signs of danger. But is that enough? Right now, we are not believing it is enough. Maybe some will deflate. The financial investors are making money, that is the private equity investors, and the public market will lose. But overall interest of the financial markets in the market will not come down, because at least one set would have done better. And maybe some of them are overpriced. But these are new things in new areas that used to say beyond a point.